Good afternoon, ladies and gentlemen. Welcome to the Northcoders Group PLC full-year results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just simply type in your questions at any time and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so, and we'll make those available via the Investor Meet Company platform. Before we begin, we'd like to submit the following poll, and I'm sure the company will be most grateful for your participation, and it gives me great pleasure to hand over to CEO Chris Hill. Good afternoon to you, Chris.
Hi there. Thanks very much. Thank you everyone for joining us. I'll get on with the presentation. Hi, my name's Chris. I'm the founder and the Chief Executive Officer here at Northcoders.
Hi everyone, my name's Charlotte. I am the Chief Financial Officer at Northcoders.
And then people who are not here with us today, we have Amal Batra, who's my co-founder and Chief Partnerships Officer, who mostly works with our corporate clients to engage them with the business. We have two non-executive directors, Nick Parker from a finance background, Angela Williams from an investor relations, Chief People Officer background as well.
Yes, just to go through some of the highlights from our reporting today. So we are pleased to announce that group revenue is up 86% on 2021, so from 3 million to 5.6. We are reporting a gross profit margin of 70%, which after all of the kind of tech wage inflation that we've seen in the last year, we're really happy that we've managed to create efficiencies to enable that to stay high at 70%. We've had a significant increase in our adjusted EBITDA, up 152% from 0.4 to 0.9 million. An adjusted EPS increased to 8.5 pence. And we're happy to report that net assets have also increased, and we closed the year with a cash balance of 2.8 million. This puts us in a really comfortable position to move forward throughout 2023 and make the investments that we want to make whilst keeping a comfortable level of cash as we approach uncertain times in the economy.
Sure. In terms of the way that the year started, the year finished last year, we had a significant growth in demand from our trainee pool with almost 8,500 applications, which is compared to just over 3,500 the year before. So that was a fantastic achievement. It really goes to show that the significant demand from the consumer trainee pool market for our products. We have signed some major corporate partners, Rolls-Royce, Every and Disney being a new one. And our headcount rose to 101 from 63, which creates more capacity for solutions contracts with businesses, as well as individuals learning how using our services. So I'll just give a quick overview of the business, because just being aware that I want to make it so it's a good summary for people who are new to the story, but I'm aware that quite a lot of people on the call will not be able to have heard this before. So we founded Northcoders in 2015. I was working at the time, I was working for Sky, and we were recruiting people from universities who just did not have the skills on the ground. I think there's some background noise. I'm not sure if someone's come off mute or something. Sorry. So we ran some training courses and ultimately ended up going to Manchester in 2015 to start our first coding bootcamp, where we hired 10 people. We trained 10 people, and out of those 10, 9 of them were hired software developers, and we grew the company from there. So obviously, in terms of student numbers, from there being a single cohort, which took 3 months, to up to well over 600 student numbers in 2022. The way the company operates, we are split into 2 main divisions, which is training bootcamps and business solutions. So in training bootcamps, we have various technical disciplines, speciality areas which we cover, which are software development, which we've done for multiple years. And more recently, we've added data engineering and cloud engineering, which work well in tandem with software development to our offering. In the business solutions, we have a consultancy product which allows us to help big corporate businesses to bring in junior software developers from all walks of life without there being a major time strain on their corporate team. And corporate academies is our university intake. So when we work for companies like KPMG, who did their academy last year and have just renewed again for this year, where they hire graduates direct from university and we teach them how to code. In terms of training boot camps, we run the training boot camps are all 13 weeks. We have a very large recruitment pool for our traineeships, whereby we only hire around 7% of the people from that to come onto our courses. And we have got a 93% placement rate of people getting a successful outcome, and that's due to the quality of our curriculum as well as the fact that we are very, we make sure we do plenty of due diligence up front as to who we're offering those courses to. There's multiple different funding mechanisms for students on our course. We've got various government funding frameworks. We also have income sharing agreements. So we have apprenticeships, finance, as well as people paying up front, consumers paying up front for the course. So the bootcamp works in 4 stages where people apply. If they get through our entry challenge, it takes around 20 hours of personal study, followed by a test. We then onboard them to our course. They go through 3 months worth of training, and we then have a team of people who work with them to get a career in the sector they're choosing. Business solutions is various ways of working with clients, and we generally tend to work with the companies on the larger side within the business solutions. We have a teams as a service model where we will hire and provide a full team for a business. And the way that we do that is that we have an internal program whereby we identify the very top performing coding bootcamp applicants. So not only are we taking the best people that want to join our framework, but also while they're working through the 3-month course with us, we're identifying the strongest people from that from there and passing them on to the corporates if they have a contract with us. We've worked with over 400 companies. Again, you know, there's some big names there. We've got a suite of products from Launch, which is our free to hire. If you want to hire a coding bootcamp graduate, you come to us and we'll allow you to put a job on our jobs board if you pass our criteria. Enhance being a product where you continue to further train people and cross-skilling. Accelerate and incubate to that consultancy model, which is Northcoders hires the employees and the business pays us a monthly rate for that service. I think I mentioned academies already before, but they are a graduate recruitment program for corporate business, and there's some names there who we've worked with recently, and these are quite seasonal, so they generally happen around September, but they've always been a large part of our corporate business. In terms of competition, I've divided that as well between the 2 main business areas, whereas in like training boot camps, obviously, you know, we do compete with like a brick and mortar traditional university. But the thing with Northcoders is that we are often chosen as a partner because we even sometimes train people who have come off university courses. They teach great underpinning knowledge, but technology moves really, really quickly, and people need to keep up with the skills, and we turn around curriculum changes much, much faster than any traditional university. In terms of other people who do what we do exactly, we have there's 3 sort of main providers here in the UK, which are ourselves, Makers and CodeClan, and generally it's Makers are very much focused on the London market. CodeClan are pretty much Glasgow and Edinburgh only, so sort of anything in between generally belongs to Northcoders. So the business solutions, the biggest, largest company in our sector is FDM, who are on the FTSE 250, around the 800-900 million market cap, although it gives us great confidence that they actually floated on AIM at a smaller size than we are today. The way that they generally work is we have very strategic advantages that we're training people all the time, and the way that the likes of FDM, QA and Sparta Global work is that they'll hire like big pools of people, which they will then train up, and they have like a bench of people who are kind of sat there and often, you know, disgruntled that, you know, they're paid a lower wage when they're not actually assigned to a client contract. And they, so in terms of, you know, brand wise, we do find that, you know, we do find companies who are preferring to partner with Northcoders over them. Regardless of competition, whether that's the sort of the training bootcamp model or the corporate model, we are solving a vast problem here. There's literally, so much government funding going into the skills bootcamps area, which provides loads of opportunity for us to train plenty of people to feed into our corporate services. So almost every sector that we're seeing it's possible to work with. We literally a couple of years ago, I remember hearing from someone that we'd hired a software developer into an egg farm. It's like, this is mad. Who ever thought that we'd be working in things like that? But everyone's looking for digital transformation, and there's just statistics after statistics that you're reading all the time about the demand for skilled technologists, and the fact that companies can't get hold of these people is really making it more difficult for them to win more business and grow themselves. Cool. I'll hand over to Charlotte to go through the finances.
Thank you. So we just have two graphs on this slide here outlining the growth over the last 4 years. We obviously expect that growth to continue at a higher rate, but it was nice to show that over a 4-year period. And then if we look through the financial statements in a bit more detail, that 5.598 revenue for last year, the sales mix on that. So that is made up of 4.1 million training boot camps, just under 700,000 in apprenticeships, and just over 700,000 on the corporate solution side. So corporate solutions wise, it was quite a small area of our business last year, and then this is a main investment area for us as we move through 2023. As we spoke about before, gross profit is strong at 70%, despite having to further invest into our tech team salaries. We also gave a one-off cost of living bonus to all staff members in 2022. That was £1,000 per staff member. That is included in those figures and hasn't been taken out as an exceptional item or anything like that. So comfortable with the forecast on that going forward, and comfortable that we should see some good year-on-year efficiencies and marginal growth. As you can see on here, we've got we've moved to a nice profit before tax, coming from a loss last year. We had a lot of finance costs as a result of the IPO last year, and obviously as we move forward, those costs won't be present. We do have a share-based payment expense within the P&L of around 200,000, and that's something that carries through to bottom line. Cash flow wise, some things to point out on here. So we have had an increase in trade and other receivables. This is mostly down to payment terms and drawdown dates of the large government contracts. There's not really any bad debt within our debtor book, and we're not at risk because of the type of customers that we have. A slight increase in trade and other payables, that's down to growth. We have tax refunded because we submit R&D claims, tax credits for the investment that we do into intangibles and the research and development that we do on that side of things. Talking of intangibles, we invested around 460,000 into intangible assets in 2022, which is obviously complete cash consumption. That is to invest in the platforms that we use to teach. Also, that is to invest in new technical disciplines as well. We did some refinancing of bank loans during the year. We refinanced our CBILS loan to a loan with a company called Creative England, which is fixed at a lower rate than we will actually see the CBILS loan move to in the coming weeks. So that was a good piece of refinancing there, and it takes away the future risk. So as we said before, we've finished the year on a comfortable cash balance. This enables us to do the investing that we want to do in 2023, but puts us in a comfortable position. Within the balance sheet, we have our non-current assets is mainly intangibles. We have some fixed assets on there, tangible assets in the form of laptops, some leasehold improvements, but the majority of it is software and platforms. Nothing too much to report. Happy to take questions on the balance sheet. It is the standard 2 leases within there as well, and then the cash and cash balances. So some kind of facts on the year. So the teaching team has grown to around 60 from 47. That puts us in a really good position to increase capacity, and we are investing into a platform that creates efficiencies within that teaching team. So we're not actually expecting that to get any higher. We received 8,470 applications in the year. That is higher than we have ever experienced before, and over double what we received in 2021. The attractiveness of these tech careers and of our course isn't going anywhere. Applications are slowing down. 39% of the students taught in the year were from a non-university educated background, and so we enjoy the fact that people can use our course as an alternative to university, and that we are taking away accessibility barriers as well. The average starting salary that graduates went on to earn has increased year on year. This is now at £27,000, but we do see people going into jobs on much higher salaries. That's the average. Placement rates are still strong at 93%. This is people that are looking to go into tech jobs that actually find the way and that find a job within 6 months of graduating the course. And we will continue to offer different funding options, as Chris mentioned before, the income sharing agreements. We want to make this course accessible to everyone. There should be no reason why someone cannot be a software developer or a data engineer, etc. Finance should not be a barrier to entry on our course.
Cool. So a little bit of the sort of outlook and the growth plan. So we have completed the investment on the development of the first 3 technical areas, as you can see below: software development, data engineering, cloud engineering. When the time is right, we'll make a decision to invest into cybersecurity, which is could be a significant growth area for us, but we also, at the same time, just want to make sure that everyone understands that cybersecurity is a very different profession to those of which we're used to dealing with. So it's also a bigger job for us to invest and develop that curriculum than it is to continue to build out the following technical disciplines, such as project support, Salesforce, and business analysis. So we are currently looking for a corporate client to work with on a cybersecurity training program to really kick that business off, but at the same time concentrating on securing the revenue we need for this year's numbers, of which we've already secured over 60% of, and that's what we are currently is our priority. So yeah, we're in line with our expectations so far, and as Jenna just mentioned, the revenue visibility of 6.1 million. Obviously, there is larger headwinds than we've had before in the past. We're probably looking at needing to talk to 2 or 3 more times the amount of corporate clients to secure new business than we perhaps did do this time last year, because of the kind of redundancies and the reduction in the spending of those businesses. But yeah, we're yet to feel like we need to be alarmed and that we're going to have a problem. Everything's going really well, and we're building some rewarding relationships. Rolls-Royce have recontracted with us this year, and we've also been winning some good public sector sort of business as a third-party provider to other consultancies as well. And yeah, the skills boot camps framework, we're on a 6-year purchase system now, whereby they have bought £4 million worth of skills boot camps from Northcoders this year, which we generally always see get an extension of about 50%, and then the year after you're generally eligible to claim your original amount plus your extension, and then obviously, so that should be good to make sure that we're budgeting the right amounts of the trainee pool being funded by skills boot camps. And then we also made an acquisition in February 2023, which was to unlock more contacts within our corporate division, because within our corporate business, we also have the need for more senior experienced software developers, and we prefer to continue with the successful recipe of creating those people ourselves rather than hiring them from others and going into the sort of recruitment race for those positions. So I'll tell you a little bit more about Tech Returners. Tech Returners have a very similar mission to Northcoders. James and Becky are still very operational within the company, but they've joined us they've joined the senior management team, as we have done a lot of the transaction based on shares, so that they're only going to see the added benefit of being part of Northcoders as we obviously work hard, deliver results, and increase that market cap and that share price. But yeah, ultimately the best part of Tech Returners is that they take people who end up just organically, mostly being women, which is very appealing to our corporate clients who have left the technology sector. The prime example would be to possibly have children and raise a young family, and then they feel like their skills are out of date, that they can't get back in, and we work with corporates to reinstill that confidence in them coming back to the workplace, and run some fairly simple light switch programs that make them, if they did X software development framework X 5 years ago, yes, technology's moved on, it moves on fast, but they do still understand the basics of being a technologist. So we're just currently integrating that business into our operations, and by the end of June, July, we will be in the position where we have that, and we are looking to really strengthen the corporate pipeline that we have with the offering from Tech Returners. Cool. Go to the
That's great. Thank you to both of you, Chris and Charlotte, for updating investors this evening. Ladies and gentlemen, please do continue to submit your questions, but just while Chris and Charlotte take a few moments to review those questions that you submitted already, I'd just like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. Chris, Charlotte, if I could ask you to open up the Q&A tab, you'll see you've received a number of questions throughout your presentation, so thank you to everybody for their engagement this evening. If I may, Chris, if I could just hand back to you, and maybe if I could ask you to read out the questions and maybe give a response where it's appropriate. That's great, and I'll pick up from you at the end. Thank you, sir. Thank you.
So I'll take the first one myself, which is, where do you envisage the share price in 5 years? Any plans for future listings elsewhere? So I'll take that into two parts. I think that there is a significant opportunity to grow this. 5 years is a long time. We have a huge opportunity to grow this company over the next 5 years. And what we are doing at the moment with things like the Tech Returners acquisition, we're now looking at ways that we're going to be able to service public sector, and rather than having to be a subcontractor with some of those competitors that we mentioned before. And once we've I feel like we've got 2 or 3 things left to unlock this year, and then we genuinely could have a incredibly scalable business model that's really ready next year, and it will be hard to say exactly where we're going to go, but the opportunity is absolutely huge. The opportunity is global. We just got to get now we've been well funded for the past 18 months. We've made some serious gains on those initiatives. And any plans for future listings elsewhere? Yeah, I'm not sure. Who knows? We will see where we take the business. We've not really thought about that one, to be honest. But as we grow and get larger, and if we do go international, then we could well be considering the second listings and so on.
Next question: what CapEx is required for your hub rollout? What is required for each hub, people, etc.? So when we did the IPO back in 2021. The hub rollout was definitely a big investment piece for us. We thought that we needed a hub in all of these cities to acquire customers. Pre-COVID, we was an in-person business. Post-COVID and post-2021, we have realised, and we've seen that we can create these life-changing opportunities across the UK without the need for a physical presence in every location. So our course is streamed in a hybrid way. It's delivered online. We've had international students that have sat the course and received just a high level of teaching as people that have had access to a hub. So if we was to roll out another hub, the CapEx is, if it's a lease, it would be some leasehold improvements, but that's not the model for us right now. So we've got a hub in Newcastle and in Birmingham, and they are more like WeWork spaces that don't require CapEx. They do just require a few staff members to obviously staff and run that hub.
Thanks, Charlotte. So you reference a focus on the London corporate market. How big an opportunity is this for you, and are you looking to displace existing providers? I've got quite a simpler answer to that question. Is the corporate market in general across the UK is a humongous opportunity for Northcoders. We are still very much revenue-wise weighted on our training boot camps. To keep our training boot camps the best quality and being referred to as the best provider of these things in the UK, we keep those numbers fairly tight. We are doing much bigger numbers than we used to do, but we're not going to start trying to grow the business by tripling, quadrupling the amount of people that we train. We're going to do more technical disciplines without necessarily doing more actual individual numbers to keep those people really rare, so that our corporate offering is as strong as it possibly can be. And we are of course looking to displace existing providers, and we are always incredibly successful in doing so. Our proposition is born from a real desire to change people's lives and to recreate opportunities. And now we're doing that not only for people who are new to technology, but people who want to return to it. So we absolutely are looking to and do displace some providers who may not quite have the same value proposition as ourselves. How do you find recruiting new teachers? Does it come from industry or education background? Are they fully employed or contracted? So everyone is employed full-time, and we generally have a good look within this large pipeline we have of people who are looking to come on our course, and anyone with any sort of education background is generally approached by us to see if they can get their head around the onboarding of the code. We'll do an early stage interview with them a few weeks into our course, and we're looking to bring them into our team.
How do you see the split of revenue between consumer and corporate moving forward? Do you have any recurring revenues or plans to launch services that offer an ability to have a recurring element? So part one of that question, how do you see the split of revenue? So in 2022, we was about 12% corporate and the rest consumer. We see that changing, so the plans are to grow the corporate revenue, and we're looking at about a 25% corporate and the rest consumer in 2023. And the plans going forward after that is that we do want to increase that corporate side of our business, but we also want to increase the kind of the value per customer. So if we can get the value out of a customer in a training boot camp, and then also have that follow on to a corporate piece of revenue, then that would be the ideal for us. Do you have any recurring revenues? So we have recurring revenues in the sense that we've had corporates do academies with us and then come back a year later and do the same academy, but nothing in the form of kind of like a SaaS or a kind of a subscriptions-based model. At the minute, there's no plans for anything like that, but we are building our own internal platforms, which we believe might be able to be used by other boot camps, so that it might be a potential that we can offer that out on a subscriptions basis in the future.
I think further to that, I'd also just add that a lot of as we invest in new technical areas, which is why we've developed like cloud ops as an example, something we can cross-sell. Cross-skilling is incredibly important to retention. And therefore, if we say, look, you've hired someone who's graduated from our coding boot camp, from our data boot camp, would you like to put them through our kind of cloud ops course to continue investing in that person, as they also invest in themselves by taking the leap into this industry. So we do think that the kind of value per head will increase with strategies like that, rather than necessarily being like a recurring subscription. Have you locked in the key people from tech returners, and were there performance metrics that they need to meet in the acquisition? So yeah, we have the key people from tech returners are hired permanently by Northcoders. There was various stages to the deal, and the performance metrics of tech returners is they are joining. We are now integrating the 2 teams, and we have got a share option scheme, which is a way of making sure that those people perform, and obviously same as many management teams, they're heavily involved in the strategy, and we do focus on bonuses for that, as opposed to just guaranteed pay.
That's great. And Chris, Charlotte, as usual, you've taken every question that's been asked from investors. So thank you once again to everybody for their engagement this afternoon. Chris, Charlotte, I know investor feedback will be important to you. I'll shortly redirect those on the call to give you their thoughts and expectations. But Chris, I wondered before doing so, if I may just ask you for a few closing comments, and then, as I say, I'll redirect investors to give you their feedback.
Thank you. Yeah, I'll just kind of repeat that. Yeah, feedback on the presentation, anything that people didn't quite understand, or anything that they left, went away thinking, oh, you could have answered that better, and so on and so forth, will be amazing to know. And we will also try, and if there is any further questions, through the platform, we'll do our, we're very approachable. We'd love to answer those. And just thank you very much, everyone, for your time. We've had an amazing year in 2022, and we've carried on that trajectory into this year. And we're just super excited to just, I suppose, get back to the day job and keep delivering those results. And thank you for your interest in our company and our shares. Have a lovely evening.
That's great. Chris, Charlotte, thank you very much indeed for updating investors once again. Can I please ask investors on the call not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback so that the company can really better understand your thoughts and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Northcoders Group PLC, we'd like to thank you for attending today's presentation. Good evening to you all.